Hi, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking crude futures. Crude started out the day lower, looked like it was going to be its first down day in about a week. Didn't end up the day that way, ended up getting back well above 53 again, never got below it. 53 being somewhat of a critical level, 52 even being more important, as that's the bottom of the channel that crude had been trying to break out of for the previous 3 months before it fell down into the $47 range again. Now, there's a couple of things affecting crude. The future of Venezuela's crude oil production. Now, Venezuela has the largest crude oil reserves known and confirmed to the globe. Now, that's important for a number of reasons. Number one, they produce the second most amount in the OPEC coalition that agreed to cut. Now, OPEC was relying on Venezuela for 10% of the total cut. They haven't necessarily gotten that, but Saudi Arabia has made up for it. It's because Venezuela's infrastructure is in such terrible shape, they may not be able to get any more crude out, and they may end up, by default, cutting more than that, which would support higher prices in lieu of everything else that's going on. So the Venezuelan situation supports higher prices. But we've also got the Iraqi situation. Now, the Iraqis are saying that they're going to ramp up their crude oil production from 4.4 million barrels a day to 5, regardless of any OPEC agreement. That is very supportive to prices. So the Iraqi situation is, that's very, puts pressure on prices. Excess supply obviously would push it lower. So if they end up doing that 4.4 to 5 million barrels a day, that will put pressure on prices, pushing prices a little lower. But eclipsing all of that is geopolitical tensions. Geopolitical tensions can eclipse the supply and demand aspects of crude oil for short to medium periods of time. Now, when we're looking at what's going on geopolitically, it's about location. The bombing of the Syrian air base is in close correlation, as well as political correlation, to the U.S. Obviously, the U.S. did the bombing. Russia, who supports Bashar al-Assad. You've got Iran, who also supports the regime, and then you've got Saudi Arabia, who is against anything Iran is for. So those are four pretty large oil producers: the U.S., Russia, Saudi Arabia, and Iran. Those geopolitical tensions, considering that they're all involved in this particular conflict, will keep crude oil above $50 for the foreseeable future. This is Bob Iaccino talking crude oil futures from the CME Group in Chicago.